folks, Dan Frio here with the Mortgage Update. Today is May 11th, 2020. I'm sorry, I'm at my home and I turned the lights on. It's too bright. I turned them off and it's kind of dark. So my apologies. I'm trying to do the best tonight. I just got home. So I want to recap what happened today. Well, a lot of the states are starting to open up, and now we're going to see a rush of people to start buying homes. The problem is, as reported on CNBC, is many people that were kind of looking to sell their home are now saying, you know what, I don't really want to do this just yet. And that's going to cause a bunch of things. But if you're looking to buy homes, that's why I said in the past few months, it was a great time to buy because the competition was less and there were still some houses on the market. Now you're going to have that much more competition, less supply. Higher demand, less supply means prices are going to go up. The good news is mortgage rates are basically staying steady. They opened the day pretty much stable and ended the day just a tad higher, and we're going to get to that in a second. So if you're still looking to buy a house, I'm going to start doing some videos this week in regards to that. We have some programs coming back online for down payment assistance, but we still offer FHA with 3.5% down, conventional financing at 3% down. Yes, 3% down, and the rates are still fantastic. So let's get on what happened today. Well, the market was, down 8. I'll take it. But basically throughout the day, there was a lot of variance. At one point, we were down 25, and we had a reprice, meaning rates got republished. Mortgage rates got republished. Thus, rates went up a little bit today. So, but what we like again, when we follow this market, we like the stability in the market. Okay, the huge volatility is coming out of the market, which is allowing us as lenders to come in and start now, taking some of this volatility risk off the table and even, sharpening up our prices even that much more. Let's get on to some of the news. Mortgage rates started strong, like I said, but ended the day just a little bit higher. Why is that? Well, the Fed is coming in on a daily basis, and they're continuing to buy mortgage-backed securities, but there was a glut of mortgage-backed securities in the market that came to market today. So you had a lot of bond offerings. The Fed came in and only bought, what they say they're going to buy, and thus it put pressure on bonds, decreased the prices and increased the yields. Okay, and as you see in here, and I think there was a great example in here. I don't see it right here, just so you guys get what I get. And just to validate what I tell you is the truth. When bond prices fall, right in here, rates move higher. Okay, so that's why we follow these charts, the mortgage-backed securities market. As the numbers fall, rates go up. We hate when this number is going down. Okay, basically a bond is an investment. Let me make it make sense to you. If it's a $100 bond and you were to pay $100 for that bond, meaning I bought a $100 bond and I gave you $100 today, doesn't matter what the duration of that bond is, my rate of return is 0. Because I give you $100, in return I'm going to get $100 at maturity. If I give you $50 and at maturity that bond is worth 100, I just doubled my money. I made 100% return. So you can see how that works. The lower the price, the higher the yield. Okay, so so we don't like red coming up here. But again, the stability in the market, we're great. We're at basically all-time lows, but we keep bouncing off them. If you're sitting on the sideline, please, I'm going to go back to my old saying. Pigs get fat, hogs get slaughtered. I have people, they're on the fence because we're at 299 and they're going to, they want 2.875. The difference in a $300,000 loan at those variances might be about $3 or $4, if that. I don't want you paying more than you should be paying, but many of these clients are at 4.5, even 5%, and they're not willing to do anything until they get 2.875, which we might not be back to on a 30-year conventional rate. I had another client today that sent me in a loan estimate, and then they were saying this company gave him kind of a loan estimate, I'll say, and the rate was just there's no way. So here's the trigger for me. I looked at the rate, and then I looked at the APR. There was about a 70.75 difference in those numbers. When that occurs, that means you're paying a lot in costs. They had on their disclosure to them, and it wasn't an official disclosure, it was just a, here's technically what your fees are going to be. It didn't have basically any cost to them. And a couple of the other costs that they were saying that that person would incur was very much underquoted. And I'm just saying that out there, not to prep you saying, hey, these fees are up here. But standard fees, for example, if you're looking to buy a home, your legal fees in that transaction is probably going to be in the range of $3,000 to $5,000. It is what it is. I don't control those costs. That's between your attorney and the seller's attorney. So this one came back and it was like $1,500. There's no way that you're going to buy a $300,000 or $400,000 home and all your title fees combined is $1,500. So please, guys, be careful. You have a lot of people that are saying, oh, here's this. And then when they get down to it and finally get you in the position to send you the disclosure so you can sign, and they know you're kind of now in a time crunch, they're going to give you the real numbers. Please don't fall into that area, because it's not going to end good. Okay. So that's that part of it. All right. So let's get on to the next thing. Here's another thing that's going to start happening with the forbearance agreement. I'm going to give you an update on that. There's a lot of companies out there that are not abiding by the forbearance agreements. And there's tons of complaints by consumers in regards to this. However, basically what the CARES Act is doing is saying, your lender has to give you relief, okay? But it's not saying that they have to, avoid making these payments. It's saying a forbearance is basically a pause. It's not a skipping. It's not a forgiving. It's a pause of your payment, okay? A lot of the companies are now not giving you all these options, and I'm telling you now, the options at the end of this is going to be in the bank's favor tremendously. And I'm going to keep beating this, and if you don't take my advice, I'm sorry, it's on you. I'm forewarning you guys as much as I possibly can. Also, a lot of municipalities, because of forbearance agreements that's taking place, your real estate taxes and your homeowners insurance, because you're not making payments, those can go in arrears. Well, here's what happens, just for example, if you don't keep up with your homeowners insurance. So if you're not making your mortgage payment, there's not enough in your escrow account to pay your homeowners insurance. So if that lapses, the lender could do what's called force-placed insurance. I had it happen to me twice. And it was just a misunderstanding between my homeowner's insurance and my lender at the time. But I got a bill saying my homeowner's insurance is now $4,000 a year. It's normally about $1,200. And I was like, what in the world? Because my payment went up and all this. I went in there and they said, well, you didn't have insurance. So we went out and got insurance for you. Well, they jack it up like 300%. And those are all the things that a lot of people are not realizing. It's not going to turn out well. So the best thing to do is look, if you can, look to refinance, skip 1 or 2 mortgage payments, drive down your payments, pay off some of those credit cards that you lived on for a month or two, because I'm sure you did. Let's get those paid off. Why pay an interest rate of 25% on a credit card? So that's my update on that. So now what I want to do is show you guys how. So now what I want to do is show you something that I'm putting together as we speak, And I'll be posting this at least once a week to give you some ideas on what's going on in these markets. Now, if you follow my channel for a while now, you've noticed that I really don't go over these segments like I used to. And the reason being is a lot of it's irrelevant at this point, okay? So what I'm getting at is I used to go over inflation numbers, what happened in the stock market, what happened with employment, what happened with a variety of things. I stopped doing that because why? Employment's terrible. GDP's terrible. The employment numbers, terrible. Everything is bad other than, what's dictating rates now is basically the Federal Reserve. When they come in and buy up the market, rates will get better. When they go in and they don't buy as much or kind of sit on the sideline, rates are going to get bad. That's it. But going down the road, once we get to a little bit of normalcy, I'll start putting together a spreadsheet, something like this, to give you guys ideas or show you these are things that affect what's going on with the mortgage rates. So if you're a realtor, you need to know these things. If you're a loan officer, you need to know these things. But I'll try to educate you guys on this. At least we'll try to get through it on a Monday so I can tell you what's coming up for the week and what effect these are going to take on in the markets. And then back to home buyers. So we saw stability in the bond markets today with mortgage rates. They upticked just a hair. Mortgage rates are, like I said, stable. We got the government municipalities. Don't do forbearances, guys. Please don't do it. Look into refinancing. All you need to do is click down below in the description. It says apply now. Just plug in as much information as you can, and we'll get back with you probably within an hour of you completing the application if it's during business hours. If not, we'll get back with you probably in the morning by 10 o'clock. So I'd love to help you there. What else do we got? That's it for now. So I hope you liked the video. Please don't forget to give me a thumbs up. If you would, subscribe down below. Share my button. I'm changing all of my namings on my websites, my Facebook, my LinkedIn's, my Twitters, everything. It's going to be Home Mortgage Update because I want to give you information about your home mortgage and I want to update you. I'm going to do that. So everything is going to be homemortgageupdate.com. So look for that in the future. But thank you so much for watching. God bless. If I can be of any help to you, please do me a favor. Go to my website. Right now, it'll be Home Mortgage Update. I'm going to plug that in right now. Home Mortgage Update. .com. Click it. And this is how you get a hold of me. You can call me at 844-775-5626. Shoot me an email at dfrio, F-R-I-O, at preferredrate.com. Or just go right here, hit apply now, fill out as much as you can, and like I said, we'll get back with you ASAP with a game plan. So God bless. Take care. Be safe. Be healthy. See you tomorrow.